results reflecting a robust performance. I'll provide highlights of the quarter and initial 9 months of FY23, along with some insights on the way forward. The first 9 months of FY23 have been one of the strongest in APSEZ's history, with significant year on year improvement in operational and financial performance. Alongside, we've added various assets in both ports and logistics business. These will not only aid our business growth in the coming years, but also enable APSEZ's transformation to a transport utility. During the 9 months under consideration, APSEZ handled 24% of total cargo at the Indian ports. On the back of 13% increase in average realization and 8% jump in cargo volumes, port EBITDA increased by 20% over the corresponding period last year. With 70% EBITDA margin for the port business, APSEZ continues to be one of the most profitable port companies globally. Talking about our logistics business, EBITDA jumped by 66% on a year-on-year basis, and EBITDA margins expanded by 400 basis points to reach 29%. This is one of the highest amongst the Indian peers. During the 9 months, APSEZ concluded 5 major acquisitions, namely the Haifa Port Company, Gangavaram Port, Ocean Sparkle, Indian Oil Tanking Limited, and ICD2. However, we still managed to maintain the net debt to EBITDA ratio within our guided range of 3 to 3.5x. Now let me talk to you about the operational performance of the company. APSEZ handled 253 million metric ton of total cargo between April and December of 2022. Among the different cargo types, coal had the highest growth of 23% year on year, liquids excluding crude grew by 8%, and containers grew by 5%. Mundra Port continues to be the largest container handling port of India with a cargo volume of 4.88 million TEUs for the 9 months. Mundra Port recorded 100 million metric ton of cargo handling in 231 days, the fastest ever in its lifetime. In our logistics business, rail volumes have jumped by 26% year on year to reach 358,000 TEUs, while volumes at the terminals increased by 31% to 276,000 TEUs. The bulk volumes increased by 70% to reach 9.73 million metric ton. Now let me discuss the financials for the 9 months as well as for the quarter. The consolidated revenue of 9 months increased by 16% year on year to reach 15,055 crores, whereas the third quarter revenue increased by 18% year on year to rupees 4,786 crores. Consolidated EBITDA for 9 months grew by 19% year on year to rupees 9,562 crores, whereas the EBITDA for the third quarter increased by 15% year on year to rupees 3,011 crores. Profit after tax for the 9 months increased by 11% year on year to rupees 4,252 crores, whereas for the third quarter, the profit after tax stood at rupees 1,337 crores. APSEZ continues to enjoy an investment grade rating from global third-party rating agencies and has maintained the key ratios well within the desired range, despite its rapid growth. I'm pleased to inform about our ESG rating for 2022. In October of 2022, Moody's accorded first position to APSEZ in the global emerging markets for the transport and logistics sector. During the same month, S&P also ranked APSEZ in the top 10 amongst 297 companies in the global transport and transport infrastructure sector. In May 2022, we provided our full year guidance for FY23. We predicted FY23 revenue in the range of rupees 19,200 to 19,800 crores and EBITDA in the range of 12,200 to 12,600 crores. Today, I can say that with much confidence that we are well placed to deliver on the top end of this guidance. For the coming financial year, that is FY24, APSEZ is targeting EBITDA of rupees 14,500 to 15,000 crores and expects the net debt to EBITDA ratio declining to 2.5x by March 24. This is after factoring a capex of rupees 4,000 to 4,500 crores and loan repayment of rupees 5,000 crores, which also includes some prepayments. Let me conclude by saying that our business fundamentals remain strong and we are well positioned to continue on our growth trajectory while being able to also deleverage APSEZ's balance sheet. Thank you.